everyone, thank you so much for joining us yet again. My name is Atisha Paramasivam. I am the Senior Wealth Advisor and Director of Goldtree Wealth Advisory. We're a financial planning business based here in Melbourne. Today's video is actually going back to basics. Sometimes when I'm in my financial planning world, I tend to forget that a lot of the financial planning jargon I use may not be necessarily mainstream jargon. So today I'm going to be talking to you about asset classes. Some of you might already know what that means, but for those of you who don't, this is a really great video to get into. To put it very simply, asset classes are different groups which a particular investment might fall into. Each of these groups have different characteristics. So if you jump into the least riskiest of the group, which is cash asset classes. These are stuff like your standard bank accounts, your high interest savings account, your online savings account. They're referred to as a cash investment. Cash has one component happening, which is income or interest that you receive from the bank. This interest or income is relatively low. Because it's relatively low, you're taking on not as much risk. If you want to take on a little bit more risk and potentially earn a little bit more, you jump into term deposits and bonds. These, just like cash investments or cash as an asset class, has that one component happening for it, which is income or interest on the bank. This is slightly higher than a standard cash account rate. The reason why it's slightly higher is because the terms of the investment is a little bit different. You're actually required to invest for a longer period, so you have a term. So term deposits, you can be invested for 6 months, a year, etc. Bonds, same thing. There is a term that you have to sit your money in there for. Therefore, you don't have liquidity. So liquidity means your ability to access your funds whenever you want to. You don't have that ability, unlike cash, which you can just grab anytime you want. Because you don't have that liquidity, you take on a little bit more risk, because risking the fact that you can't access your funds that quickly, but you get a little bit more extra in terms of income compared to cash. The next asset class on top of that is stuff like property. You can do property directly, or you can do it through a property fund. Now, property, unlike bonds, term deposits, and cash investments, this particular asset class has two components. You get rent from your tenant, which is your income component, and then you've got growth. So your property value could go up and down over time. Because you have that ability to potentially earn more, you do have that same exposure to potentially also lose just as much. Therefore, this asset class is a little bit more riskier compared to your term deposits and cash asset class investment. If we take on even more risk, we jump into shares, which is another asset class. Shares could be direct Australian shares or international shares. Shares, just like property, have two components. It could be income, which is your dividends that your company that you're invested in gives you, which is their profits, or you have the actual growth. So your share could go up and down in value over time. The reason why it's considered to be a bit more riskier, because that value of that share is so volatile. It changes so quickly. The reason why it changes so quickly is people can react to that share very quickly. In other words, you can sell or buy very, very quickly, unlike property. Because it's so reactive, it's more volatile and therefore more riskier. You could potentially earn more, but at the same time you could potentially lose a lot more, therefore it's considered more risky. This is pretty much the major asset classes. There's a lot more out there as they branch out even further. But hopefully this is giving you at least a starting point into understanding it. We'll link a few more information down in the description box and on our blog page. If you want more information, also feel free to email us or give us a phone call. Until next time, thank you so much for joining us. Please subscribe if you haven't already. And until next time, bye!